The Clarity Bill, of course, is getting ready to get voted on this week. We'll break it down. I've got a special guest that's going to give us the insight to what's going on in D.C. Let's get started. I want to thank our sponsor. That is Uphold, where you guys can get a ton of rewards, including money back on their debit card. And one of the other things you can do there, of course, is staking rewards. That's something that is available on over, now 20 assets over on Uphold. So check it out using our link down below. All right, let's get into it today. I want to lead off the show with a clip that is kind of a culmination of where we stand right now on the Clarity Act and the stance that DC is facing. Take a look.
I think we do have a compromise that is going to make, the banks happy. We've given enough concessions. We've arrived at enough compromises where as high as 6 Democrats voting for it. So
an ex-post, I should say, from Patrick Witt saying, and it's highlighted here, no bill is better than a bad bill. Of course, he's quoting your CEO.
This bill had less than 24 hours to breathe. We had 6 amendments that would have made the bill materially worse.
It had the potential to shut down exemptive authority.
I'm not sure, where Coinbase was getting that. It's just false.
I would urge some of the crypto folks to be a little bit, to see the bigger picture. I bet you over time, the banks like the idea of paying yield because they're going to be in the stablecoin business.
But do you believe that? All right, so that was Matthew Siegel on Vanna. What we were getting at is the issue of yields. Should we be forfeiting those? If you are been watching at all, you guys understand this is one of the big sticking points of the Clarity Act. So I wanted to bring, of course, Cody coming in from the digital chamber. How are you, Cody?
Doing well, Paul. Thanks for having me.
Nice to see you again. Hey, listen, I'm going to give you the benefit of the doubt on that last statement from there. So I didn't understand where you guys are on this, but obviously there's a lot of issues that are happening right now in D.C. Where does this bill stand? Do you feel like this still has legs to go?
To be honest, we're in a tough spot right now, and we're kind of in no man's zone. We don't know what the future is. You just hit the nail on the head with that roundup. The prevailing issue right now and what is blocking this bill from moving forward is the stablecoin reward piece. There are other issues. There are ethics issues. There are some issues around DeFi regulation. There's some issues around quorum at the CFTC. But the main issue and what is holding us up and why the markup was delayed was stablecoin reward piece. Without a compromise between the banks and the crypto industry, we're not going to move forward. Mm-hmm. So we'll have Senate Ag move forward this week, which is great. It's half of the bill. It is a less controversial half of the bill. It is more on the CFTC regulation, giving the spot market jurisdiction to the CFTC. It is a needed step in the process, but until we figure out the stablecoin reward piece, we're not going to go anywhere. And it's tough to swallow, but that's why we need to be at the negotiating table.
Well, yeah, I understand the negotiation side. However, it does put us, and I say us, meaning the crypto industry, in a very precarious situation. We've watched Patrick Witt, obviously, I would say, instigating a fight publicly with Coinbase, which is, I would say one of the key authors, not authors, but definitely supporters of this bill. When you look at what he's doing, why isn't he blaming the banks? I mean, this should be, they're the ones that came in with the amendments. The banks are the ones that are now wanting to change essentially what has been done or preordained out of the Genius Act. Why are we not getting support from Witt in that area?
The banks are the reason why this is being held up. The banks were nowhere when it comes to Clarity Act. I had my team go back to see when the bill passed the House. I had my team to go back and say, did the banks make any noise? Did they oppose the Clarity Act when it passed the House?
You mean Genius
Why didn't
Act?
they want to?
Oh, when it went through
Clarity
the House.
Act.
Okay.
When it went through the House, the banks were nowhere. And the banks sat on the sidelines, and then the Genius Act passed, and they were on the sidelines again when the Genius Act passed. And said, oh, shoot, we didn't know about these things called rewards that were not new, Paul, as you know, that have been around since, 2019 when Coinbase started issuing stablecoin rewards. And they were just late to the game. And now, by entertaining the bank's negotiation tactics or amendments to this market structure bill, which we shouldn't be talking about stablecoins anymore because we dispense with that in the Genius Act, we have now set ourselves up for where we are forced to negotiate. And that is not Coinbase's fault. That is not the crypto industry's fault. That is the fact that there are a lot of Republican senators and Democratic senators who are sitting at home saying, I must listen to the banks. The bank lobby is very powerful. The bank lobby has the ability to influence votes in my state. What these Republican senators, and again, it's not just Democrats, it's Republican senators who are sitting in the Senate Banking Committee who are saying, I'm hearing from community banks that stablecoin rewards will put them out of business. We don't agree with that. It seems asinine to me, but it's the truth. And so while Coinbase had a big hand in why the markup was delayed, and I agree with a lot of the things Coinbase said in terms of Brian Armstrong's tweet of why they opposed the bill. Substantively, I agree. I think where I'm coming from and likely where Patrick's coming from is just like, hey, we have to sit at the table. Let's not walk away now. But to your point, I couldn't agree more. The banks deserve all of the grief here and why this bill is being delayed. The silver lining here is that if we do nothing, Coinbase wins, the crypto industry wins in terms of stable coins, and the banks lose. Yeah. And so the banks need to negotiate, because the status quo for the banks and say, hey, we're going to tank this bill, we're going to do nothing, is that rewards will continue. It's a loss for them. So I think what Patrick is trying to do, and I think what we're trying to do, is let's get everyone back to the table. We now understand, despite as much as we have advocated for to Republican senators, that they want to listen to the banks, that they think rewards are a problem. We don't agree. We'll continue to educate them on that, but that's where we are today. So if we want a market structure bill, we're going to have to address this, but we're not going to accept a bad provision and a prohibition on rewards. Can't accept it. We understand that. So that's where we are today, and that's why this bill is being hung up.
All right, so this seems like a negotiation situation that is brewing. I want to play this clip from Patrick Witt, and then we'll comment afterwards. Just take a look at this.
Sure.
We have some work to do to convene, play a bit of a mediator role between the folks on either side of the stablecoin rewards and yield debate.
Does the White House have a position on interest-bearing stablecoins?
We don't necessarily come out one way or the other. We've heard from a number of Senate Republicans concerns about what this could mean for community banks in particular. We're not deaf to those concerns. It's going to require some folks to make difficult decisions that might hurt one part of their business. It's not just exchanges, it's broker-dealers, it's folks writing DeFi code. But that's the nature of compromise and negotiation, and step back, zoom out.
I mean, that startled me when he said people writing code are now in the crosshairs. I mean, that essentially is an attack on freedom of speech. At the same time, you've got the affordability issue here in the United States, and Trump has another opportunity where he could get something through that would give every American an opportunity to earn rewards on their U.S. dollars that are converted to a stablecoin. It just seems like this is the worst negotiator ever. I feel like this industry has the upper hand. You know, we should be, trying to come to the table, but at least understand where you are.
I couldn't agree more. We have to come to the table. We want a bill, because what my fear is that if we don't get a bill over the next few months, we could go into a divided Congress. Democrats could win the House and put Maxine Waters in charge of financial services, or even worse, they could win the Senate and Elizabeth Warren is in charge of Senate banking. And then that could set us up in 2028. Who knows what happens? So we need a bill to ensure that Gary Gensler never comes back and we never face that regime again. However, and I think this is where Coinbase is coming out, and when you hear things about like developer protections, there are some really, really bad proposals that Democrats have put on the table. They want to make every developer a broker-dealer to register with the SEC. They want to make every developer a financial institution and regulate and register with FinCEN or the U.S. Treasury Department. It's asinine policies. It's all about control, to be honest. And so we also have to, as a crypto industry, say, yes, we want a bill. We need a bill to protect this industry long term as it is being woven into the fabric of the economy. But we can't sacrifice these fundamental rights of what makes this industry great, and fundamental rights that are as relates to the Constitution. As you said, freedom of speech. Developers must be protected. Let's protect stablecoin rewards. There should be competition here. The reason that we're talking about a market structure bill and that has been a priority number one for Congress and this administration is because people want crypto. People want competition to the traditional banking system. They want access to financial services and not have to go and pay exorbitant fees to their credit card companies. We need to look at the bigger picture. We want a bill, but we're also not going to sacrifice everything that makes crypto great just to appease Democrats to get to 60 votes in the Senate. Why
do you think we aren't seeing the White House come out on a pro-stablecoin yield position? And at least Trump, I mean, he's been very active about talking about Bitcoin and crypto and all that. You would think he would give that to the people, saying, hey, yeah, well, I like yields. Yields are good.
To be honest, I think it is a negotiating tactic right now to get the banks to the table to compromise.
Okay.
I can tell you from every conversation I have had with the White House, with the OCC, with the Treasury Department, they have been very supportive of the Genius Act as written. And they know that that rewards existed pre-Genius Act and can exist post-Genius Act. And from everything they have told me, they have assured me that they are supportive of rewards, that they like the innovation in the stablecoin space. They want to see the stablecoin market grow. We've had the Treasury Secretary say just in November, he expects this industry to be a $3 trillion industry by 2028. There is a massive upside for this administration to see the stablecoin market grow because it means the growth of the dollar. And so from every conversation I have had, I believe that they are fully supportive of rewards and allowing rewards. And that is why they didn't just cave to the banks in this negotiation, or why Senate Republicans didn't just cave to the banks in this negotiation, and why they said, hey, let's step back. Let's try to get everyone at the table. We want to see this bill move forward, but we have a lot of allies in the administration and on the Republican side who are pro-rewards.
I'm surprised we haven't seen Bessent jump into this because he is very pro stablecoins in general, and stablecoins essentially are going to be in a position where they're propping up the U.S. dollar via treasuries.
I couldn't agree more. I mean, a little known thing that happened at the start of this administration in early January, the White House sat down with some crypto industry leaders and said, we're going to prioritize stablecoin legislation and then move to market structure legislation. The sole reason for that was because of the strength of the dollar and what the expansion of the dollar can mean for the U.S. economy. They want everyone, whether you're in Venezuela or Argentina, or if you're in Hong Kong or Singapore, they want everyone accessing the dollar through US-backed stablecoins. They want the US-backed stablecoin to be the new reserve currency of the digital world. And that's why we started with stablecoin legislation. It wasn't just, market structure is more complicated, we'll do that second. It was, no. We're going to prioritize the Genius Act. We're going to get that done. And then we'll move to market structure. And that was a call from Secretary Bessent and the administration.
I don't know about this negotiation tactic. Maybe the Trump administration has, some kind of strategy here. I'm not sure. It does not appear, looks like it's still leaning toward the banks to try to appease that lobby going forward. But of course, this I think will have massive effect, ripple effect into how developers are going to grow. Because to me, this is like putting almost the regulation that never happened on the internet on an emerging technology like blockchain in a country that should be leading the way. I think ends up losing its global position as the number one, mecca of crypto, as Trump keeps claiming. So this is a big deal, I think, going forward, if we don't see the growth opportunity.
And to call it out for what it is a total farce that the banks are saying that they are concerned that stablecoin rewards will lead to this massive deposit flight and that it would crush community banks. It's just not true. There's enough data out there to back that up. This is all about competition and protecting a moat over bank deposits. They are terrified that people will start to put their savings in stablecoin rewards. There is nothing, or in stablecoins, there is nothing right now that prohibits the banks from offering stablecoin rewards. Every one of these banks is building their own stablecoin right now. They can offer rewards of 3.5%, 4%, 5%, but they don't want to do that because that is money that can go into their own pockets. So this is all about competition, and it's nothing more than that.
If we were to come to an agreement, in the negotiation table, and then the Dems don't vote for it.
It's totally plausible. I mean, if you look at the Senate banking bill, the last draft that was released right before this markup was supposed to be scheduled, the week of, I think, January 15th or around there, That bill was a Democratic bill. There was a ton of concessions that were given to the Democratic side, whether it was on DeFi or it was on this new network token concept where the SEC remains the front door. Mm-hmm. And I have not been, it has not been communicated to me that Republicans received assurances that because they were giving so much to Dems in this bill, that Dems actually said, oh, we'll vote yes on this. I don't think the Dems ever got there. And that is pretty scary. So at some point, what I would like to see Republicans do is force a vote. Hey, this is a good market structure bill. If we can get through some of these compromises, we have the crypto industry.
You stand.
At least you know where you stand, and force Democrats going into an election year where crypto will have a huge influence once again to say, hey, are you for this or are you against this? Do you believe this industry should exist and we want to regulate it, or no? And if they vote no, then they're going to have to justify that when they talk to their voters back home, when there is a massive swarm of crypto voters.
All right, who's heading the negotiation right now? Would it be Patrick Witt, or would it be the lobby groups? Who's doing that?
It's kind of a mix right now. So I would say it's a combination of the trade groups. So whether it's the American Bankers Association and the Bank Policy Institute on that side, it is the Senate banking Republicans and their staff. On our side, it's, us and Coinbases of the world and some of the other trade groups. And then the Patrick Witt and David Sachs in the White House. And so we have this almost four-headed monster that are meeting in the middle, trying to figure out what's next. We're at a standstill right now. We're all waiting now to see what happens in the Senate Ag markup this week. Are they able to get a bipartisan vote and start to move some things and shake some things and build some momentum? It seems like it's going to be a partisan vote right now on Thursday, but we're all waiting to come to the table. I think we all have our demands, and then it's just now finally we need to sit at the table. We've all stepped away for a little bit to get a breather, and now we need to come back to the table.
I feel like this is one of the things, though, that's already a loss, and that was Roger Marshall not offering the credit card swipe fee amendment, which has been dropped from the bill now. For those of you who don't understand, what it really boiled down to, Visa, Mastercard probably loves this because it was designed to give an additional option, for being able to, when you go to a retailer, have an additional option that you can use both for settlement but also use case. That would have opened up the point of sale to crypto, or at least the opportunity. It could have been crypto and many other things out there, especially as we get into more and more digital currencies. So the fact that this is being stripped out away from it, I think maybe a bullet. Visa, MasterCard got a win here.
And I can tell you, Paul, this is a perfect example, or maybe an ugly example, of politics driving policy and not the other way around. This was strictly, hey, we think this bill, it can be toxic. There are a lot of Republicans who are uncomfortable with this bill. There are a lot of Democrats who are uncomfortable with this bill. And if you attach it to already what is becoming a toxic market structure or a partisan market structure effort, it's just going to tank the vote. And you're not going to get enough Republican support to vote it out of committee. And so this was strictly politics behind the scenes of saying, hey, there's a lot of people who support Marshall's bill. I think the president supports Marshall's bill, but just saying, hey, if we want market structure to go, this is not the right venue to attach this on because it changes the narrative and it's going to tank it.
Yeah. I want to play a clip for you. This is an old clip that was during the Genius Act negotiation, and it is of Bernie Sanders, and I'll explain where we're going here after the clip. Take a look.
They want to take your money and give you a worthless token in exchange for it.
Well, do I get any interest? I mean, if I get a CD gives me 4%, what do I get on a stable coin?
You get no interest.
So explain that. What do they do with my $1,000?
Best case scenario, you get $1,000 that remains worth $1,000.
All right. So if interest rates are going, if inflation is going up by 4% a year and I sell, it's worth $960 or something like that. Is that correct?
So you can't ever make money on stablecoins, but as you pointed out, they can fall.
So I've actually lost money. Is that a fair summary?
Yeah, absolutely.
Okay. People are using crypto to kill other people?
That's right.
All right, so I have to show you that because this is out there, okay? This is Bernie Sanders. He was brainwashed, basically, by action groups that have kind of gone in straight. We all know this is all false now. Why not activate Bernie Sanders? Because he is a very pro-consumer politician. I think once he learns, wait a minute, the American people can get 4% by just parking $1 and they support a U.S. Treasury, why wouldn't I back that? And of course, Sanders is very powerful. Why not get him involved and try to activate the Democrats through Sanders' camp?
Well, one, I appreciate the entertainment for the day because that was laughable. I think something to point out too for your viewers, the guy that was talking there to Bernie Sanders, Corey Frayer, was Gary Gensler's top deputy at the SEC for 4 years. And that just shows you where we were as an SEC and what we were facing on the crypto side.
Lies.
We are trying
They're
to
just lies. Just
lies. It's crazy. We are trying to activate Bernie Sanders. We have reached out to all 100 senators, whether it's Bernie Sanders or Elizabeth Warren, and we have given them cheat sheets that we can share with you, Paul, that you can share with all of your viewers on what is the benefits of stablecoins, how it provides access, how it provides faster settlement times, how it allows, for more liquidity in trading. There are such benefits here, and I think people don't understand the benefits that rewards can play, that what stablecoins can play. Businesses, when we talk to small businesses, you'd be amazed that they go, wait, I can start onboarding through stablecoins and save how much money? I don't have to pay these interchange fees to these credit. I can save how much? It is all about access. Stablecoins, if you really boil it down and you talk about the benefits of stablecoins, they are all talking points that resonate so perfectly well with the Democratic platform. And that's why it drives me nuts that this is a partisan issue. I was glad to see when the Genius Act passed that we had 18 Senate Democrats support it, that we had over 100 Democrats in the House support it. I was hoping that that was the beginning of a change in tide, that we were saying, okay, finally, this is becoming a bipartisan issue. People understand the benefit of technology. Then I see videos like that, and I see people can be brainwashed. So we are trying to undo that brainwashing. It takes a lot more when you have to undo brainwashing than just to educate someone from the start. But we are going in and we're talking to Senator Sanders, we're talking to Senator Warner, we're talking to all of the opponents who voted no on Genius Act and who have been very vocal opponents on Clarity or any crypto bills, and saying, hey, there's still time to change your mind. No one will judge you if you change your mind here and say, you know what, this is a value add to my constituents.
Yeah. Do you think, Cody, that when you look at well, first of all, you mentioned this earlier, is there a way that they could split out the stablecoin yields issue and vote on that separately so they could find out who is for and against?
We would love that. That would make the most sense. There is no reason that we needed to add stablecoins to market structure. That could be a completely standalone issue, and we can continue with the merits of market structure and trying to give the SEC regulatory roadmap, give the CFTC a regulatory roadmap, token issuers, token exchanges. Right now, Democrats are saying that's a no deal for them. They believe that the only vehicle to address this in is market structure because it's the only one that's moving. Yeah.
Well, with that being the case, I'm going to show you a couple of things here. This was news from Aave introducing Kraken, their DeFi powered DeFi Earn. Basically, you can deposit cash now and stablecoins into these dedicated vaults. You look at these vaults going, Kraken Pro right there, just an example of up 8% right now to possibly earn, and the potential here of where you can even allocate. So I know it's a more sophisticated trade. For most people, it's not going to be something they would do. But for the sophisticated investors, this is an escape hatch for if yields do not occur. Do you think banks understand what's happening in vaults right now?
No. Banks didn't understand that rewards existed for 7 years before this, and that's why they stayed quiet on the Genius Act.
Come on,
so
Cody, they had to know this.
I honestly think, and when I sit in these negotiations and these page turns over market structure, there have been senators who have asked, where were you several months ago?
Yeah.
And like, we weren't paying attention. We didn't know. And it's crazy to conceptualize it, but that's where we are. And so, right now, if you prohibited rewards, you can still go using your USDT tether, and you can still stake it on MetaMask and get rewards. So I don't think the banks have any idea that there's other options out there, but we don't want to give them any inch because then they will still try to take a mile. And once they wake up to this, they're going to be pissed. But that's the beauty of the digital asset industry. It's the beauty. Like, we will always find ways to innovate because this is about empowering the people. That is the whole point of blockchain technology. It's more about the ownership economy and giving more power to the people that they can earn money. The banks will lose their minds on this, but I think we're 2-3 years away before they have any understanding of what a DeFi vault is.
I mean, you've got Wall Street moving in this direction. This is Bitwise, all right, right there. Today they announced this Bitwise program. They're launching a non-custodial vault strategy as a curator on Morpho. So again, more ways. This is Bitwise, one of the biggest funds out there in terms of really next generation tech, especially in fintech. So you know that this is just the beginning of what will be an onslaught into Wall Street around DeFi. It's coming. My concern, again, gets back to the whole point of if they push so hard that we lose all of the momentum of America being the crypto center of the world, and we end up losing that to Dubai or Singapore or Luxembourg or one of these other countries that basically all these devs and all these companies start to migrate to, because that could happen so quickly. These companies are already very, very fluid in terms of where they're operating.
100%. We compare this quite often to the dot-com boom. And we have a choice right now where we're either going to be the United States and continue to be the United States and lead the dot-com boom, or we're going to be Europe, who has spent the last 25 years trying to play catch-up. Companies are fluid, to your point. They are nomadic. People will move up and move out like this.
Yeah.
And so I think the White House is hyper aware of that. They want everyone to remain onshore. They're all about reshoring, whether it's manufacturing or it's crypto. It's keeping people in America and displaying American excellence on the world stage. This is our biggest talking point when we're on Capitol Hill, is that if we don't get this right and we limit or curb innovation right now, we will be losing to the rest of the world, because we already are. And we saw what the last 4 years was of losing to the rest of the world. These jurisdictions, we gave them a 4-year head start. We have a very unique ability right now to catch up. The only way we're going to get this wrong is if we bend the knee to legacy institutions who, by the way, are doing everything they can to integrate crypto, blockchain technology, digital assets in their own platform.
Yeah,
it's just competition.
Yep.
So we have to get this right. And that talking point of a mass U.S. exodus and what it will mean for developers, what it will mean for revenue towards the economy, what it will mean for politicians for votes as those people flee their jurisdictions, it resonates. It really does. We just need more people to be loud about it.
Let's go to this clip, because this, to me, resonates very big with Trump, because he is so hypersensitive to the market, okay? Listen to this clip right here.
The House's Clarity Act stablecoin legislation remains held up in the Senate right now. Now, Kraken reportedly moving closer to the public markets, confidentially filing for an IPO where they reached a $20 billion valuation, a potential government shutdown that could really backlog the IPO market again.
Yeah, that's a real problem for us. This should be a record for all IPOs across the board. And you think about it, Stripe, SpaceX, and the crypto companies as well. This should be a record year for IPOs. But if we see a prolonged government shutdown, especially a battle, there's still a path for going public, but it is a very, very narrow path. It'll gum up the works in terms of the market recovery and in terms of the market growth this year, And I think ultimately we got to make sure they don't politicize this thing too much.
Here is I think the footprints to failure right now that we're dealing with. Here was the Avalanche spot ETF debuts on NASDAQ, 0 net inflows, all right? That's because, and we all know, clarity is the holdup here. It's what's holding back projects like Avalanche, which should not have had a 0 net inflow. Absolute terrible. And then you look at BitGo. Let's not forget, BitGo just went public, comes up, immediately retraces. Another concern because of blockchain orientation. He mentioned SpaceX potentially could deploy blockchain technology. Stripe could potentially deploy blockchain technology, all of which would now impact their IPOs, which impacts the S&P. And I mean, the trickle-down effect here could be massive for Wall Street just because of stablecoin yields. That's what this is boiling down to.
It's insane, but that's where we are. I mean, the perception in the United States for whether it's institutional investors or retail investors still is that any nexus to blockchain technology is inherently risky. And when they look to sell, they'll sell those assets first. That's unfortunately where we are. The way to mitigate that is passing market structure legislation. The fact that it could be held up by stablecoin rewards is asinine. It just shouldn't be the case. We passed a stablecoin regulatory framework. We're still implementing a stablecoin regulatory framework. There's an 18-month implementation phase after Genius Act. And the fact that because the banks were asleep at the wheel in July of last year, we're now having this fight, and it can have a massive, massive impact on the economy, as we're already seeing. Blockchain technology eventually, over the next few years, will be something I think will be a risk-off asset. Any nexus to blockchain will be a risk-off asset. It'll be a safe haven. And hopefully that's where the market is going. But right now, it's just not the case. And so we're seeing these massive downturns. When anyone starts to sell off, it affects the entire industry. And that's just not good for the economy. And it's why we stress every single day, this has to be nonpartisan. Yeah. Republicans have gone on board. We have an administration that is a Republican administration that's gone on board. That's great. But it's easy then to overlook that when we passed the Genius Act, almost over 100 Democratic members in the House supported it. When we passed Clarity of the House, almost 100 Democratic members supported it. There is real interest and intrigue from the Democratic side of the aisle. And I think too often the crypto industry ignores them. We actually ran a poll in November of last year, and we looked at the political leanings of crypto holders. They lean left. They lean Democratic.
Okay.
But they vote Republican because they vote with their wallets. They are single issue voters. And so we need to lean in and educate more and more Democrats. Right now, the people who the Democrats are listening to, as we just watched in that Bernie Sanders video you showed a few minutes ago, are these historical Democratic consumer think tanks and protection associations. We need them to open up their doors and open up their ears and start to listen to more of these innovative crypto associations like the Digital Chamber or like some of the other associations, and show them the truth of why blockchain technology makes sense for the Democratic platform, makes sense for their constituents. Because to your point, we are right now in a very precarious spot that if we get a Democratic controlled Congress or a Democratic controlled White House in 2028, we will be sitting here in 2028 being like, damn, I wish we passed the Clarity Act in 2026, because now we're at, the hands of this administration that wants to kill us, and we're all moving to Abu Dhabi. And that's just not the way we can go.
Well, that is the issue right now. And of course, this does put a lot of pressure on Trump because, and especially if you just look at World Liberty Fi, a lot of Trump's activities, this of course is, I think, what has raised it into a partisan issue, is now it looks as though this is benefiting Trump and his family and all of that. But I do agree. This is, the negotiation level, the more I think about it, you almost wonder if the banks have the upper hand here because of that alone. There's a lot happening, man. I'm glad I don't have your job because, first of all, I would never, my temper would go nuts in D.C., so I'm glad I get to do that from here. Cody, thank you so much for coming in today. We appreciate it.
As always, Paul. Thank you, sir.
Great seeing you. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.